Hola! Welcome to the Technical Analysis playlist, where we learn how to trade from beginner to pro. First of all, I'd love to share some exciting news with you. Can I get a drum roll, please? bohocryptogirl is now on social media. Follow me on Instagram, on Facebook, on Twitter, and on Telegram. Pause this video and be the first to follow me everywhere. And without further ado, let's dive into today's lesson. Last week, we covered what candlesticks and OHLC bars represent. If you're a complete beginner to technical analysis, pause this video now and make sure you watch that video first and then come back to this one. I will leave a little thingy up there that you can click on and go there and then come back here. Today we will cover what to look out for when reading price action through the use of candlesticks. Let's start with some trading vocabulary. Price action. What do we traders mean when we use the word price action? Price action is how prices behaved in the past, even in the past minute. And we can retrieve this information from candlesticks. So candlesticks and OHLC bars will represent this information. Again, if you don't know what I'm talking about right now, then watch the video and then come back to this one. Technical analysis. What is technical analysis? Technical analysis is reading the charts. So reading the information that is presented to you through a trading chart. Next in our trading dictionary is the word bullish. Bullish means that there are more buyers in the market. Think of Red Bull gives you wings, or in Spanish, Red Bull te da alas. I'm not actually sure if you can say that in English. I haven't watched a Red Bull ad in English. Nope. But anyway, Red Bull gives you wings. So think of just the bulls running upwards. So that's bullish. When you get either a very long green candlestick or you get many green candlesticks going up. So price is moving up. Say for example, you have a Bitcoin that costs $1,000 and if it costs 1,001, 1,002, 1,003, or even higher than that, it's bullish. Next word is bearish. What is bearish? Bearish is the opposite of bullish. So instead of price increasing, price is going down. And you can find something to represent that for yourself to make it easier, but think of it as the opposite of bullish, right? The bears are going down, so candlesticks are going red, and bulls make the price go up, which means candlesticks are going green. And on the chart, the movement of the price is going in an upward direction, and when it's bearish, the price is going in a downward. So the candlesticks on the chart are going in a downward movement, or in a downward direction. We look for three market situations when trading candlesticks: continuation, reversal, and indecision. We'll cover all of these three right now. Going to go over to the tablet, the famous tablet where I was doing my professional, very artistic drawing in the last video. And this time I've prepared a PDF, which is a little bit more neat and tidy, but I'll still use my special pen to scribble on the spreadsheet, on the PDF. Yeah, it's a PDF. Okay, so let's move over to the tablet. We are going to start with continuation bars. What are continuation bars? Okay, so continuation bars, what they represent is the price is likely going to continue in the same direction that it was in. So if price was going up and you get a continuation bar, then there's a high chance, or there's a possibility, a high likelihood of the price continuing, or you can say that, in the same direction. So let's just remember that these two bars are representing the same, right? This is an OHLC and this is a candlestick, right? But they both represent the same. It's just some people prefer to look at candlesticks and other people prefer to look at OHLC bars. A bar can be considered bullish if it opens in the lower third of the bar, right? So it opened here and it closes in the top third of the bar, right? And so you'd have a candlestick that looks like this. It's got a pretty full body, right? So it opened here and then it closed here. It can also be all the way like that. You've got candlesticks that literally fill the whole thing. Let's look at a bearish continuation bar. The same rules apply. If the candlestick or the OHLC bar has opened in the first, third, and also closed in the lower third, so in the top third and the lower third, then you can consider this bar to be a bearish continuation bar, so indicating the price may continue to go down. Now, none of this is definite. These candlesticks or OHLC bars, they give us an indication of where price is likely to go next, but it's not 100% a given that the price is going to go in that direction. So let's bring this into practical terms. I made a little drawing down here with some candlesticks, purely at random. So have a little look here and see if you can point out which candlesticks represent price continuing in the same direction. So which of these candlesticks are continuation bars? So this is one continuation bar. All right, this is a continuation bar. Right, this is a continuation bar. This is a continuation bar. So this is bearish, right? These are bullish, these green ones. This is a continuation bar, a bearish one, and this is a bearish continuation bar. We will explain this bar later. We had that bar followed by a bearish continuation bar. And so this bar here is indicating that price is likely to continue going down. And then we had another continuation bar, which again indicates price is likely to continue going down. And then from here, this is not a continuation bar. Okay, so then let's skip this for now. So we're going to skip these, and now let's have a look over here. We've got this little weird bar here, which we don't know what it is yet, but then see, we've spotted here a bullish continuation bar. We get another one right here. And then we get this weird bar here. So at the moment, we don't know what that is, so we just leave it. All right, then moving on to here, we've got a continuation bar indicating that price is likely to continue going down, and then we've got another one here. All right, so as I said before, it's just an indication of where price is likely to go. It's not a confirmation. Do you understand what a continuation bar is? Do you have any questions? Let me know in the comments below. I forgot to say, subscribe to the channel. Don't forget that. And like this video. Okay, so moving on. Let us have a look now at reversal bars. Reversal bars basically indicate that if price was going in one direction, there's a chance that it's likely to go in the opposite direction, right? To reverse and go into the opposite direction. So if price was going up and then you get a reversal bar, then you need to be careful because it could be an indication of the fact that price is probably going to stop going up and it's going to start going down, or it's going to retrace. So let's have a look at some reversal bars. We have high test bars. High test bars indicate prices are moving down. It doesn't matter if the bar is green or red. If you get one of these bars, then you know that there's more selling power in the market. You can spot a high test bar by splitting the bar in half and then seeing whether the candlestick, in this case, whether it's opened in the lower half of the bar. So in this case, the candlestick has opened here, and then there were some price movements, and then it closed here. So this is considered to be a high test bar because the price reached up here. It tested the high of the bar, which is up here, right? And then it rejected it. It came back down and closed. It still closed higher than the price it opened at, but it's in the lower half of the bar. The same here. In this situation here, the bar has opened up here, and then price went up and down, and then it closed here. What are low test bars then? Low test bars are the exact opposite. Split the bars in half, and if you have this little thing happening here, and if it's got a nice wick, a nice long wick, then that is considered to be a low test bar. Let's have a look at some other reversal bars. We have train tracks. The bar has opened here, it's gone up, and then closed up here. The train track is actually 2 bars. So if we see a bar like this, followed by a bar like that, then we know that there are a lot of sellers in the market pushing the price to the downside. And so we need to be careful, because what these two together indicate, so if we see them together, it could be a good moment to get out of a trade if we were in a trade on the way up. Okay, so in a trade on the way up, and then we spot this candle here, and then it's a good time to get out, basically. Let's look at this from a bullish perspective, right? So more buyers pushing the price up. Okay, so let's say we had a downtrend, we had some bars coming down, and then we have this bar here, followed by this bar here. Some people also call these the twin towers, but I like to keep it simple. I just call them bearish train tracks and bullish train tracks. And it's the exact same thing in a bullish market. So this is a bearish market because price has been going down. And then you get this candlestick here that indicates that price could reverse and go up now. So if you're buying, if you're a buyer, this could be a good moment after this bar. If you have a small bar here, then it could be a good moment to get in. If you were selling, then this could be a good moment to get out. Let's have a look at some more reversal bars. We've got engulfing bars. We read the chart from left to right. So on this side, we're going to have the bars coming up. If we have any bar followed by a bigger bar, in this case this one here, then we could consider this to be an engulfing bar if the top of the bar is higher than the top of the previous bar, and the bottom of the following bar is lower than the bottom of the previous bar. So it's like if this bar is eating this bar alive. That's an engulfing bar. This here would represent that price is likely to change direction, and the same on this side here. So we know that price is coming from here, and we've got all of our candlesticks, and then all of a sudden this bar shows up. We can see that the top of this bar is higher than the top of this bar, and the bottom of this bar is lower than the bottom of this bar. So if somebody was standing here, they wouldn't be able to see any part of the bar that's behind it. This bar is completely covering the previous bar with the wicks and with the body. Now let's move on to indecision bars. What are indecision bars? An indecision bar represents doubt in the market. Usually, we just don't know what's going to happen next, basically. And we've got bars to represent this as well. So let's have a little look at what those bars are. Inside bars are considered to be indecision bars. So this is pretty much the opposite of what we've just seen. So we've had engulfing bars, right, where the outer bar was pretty much covering the previous bar. And now we've got inside bars, which represent indecision. It is kind of the other way around. Let's say it is a bearish market. So we're coming from here in this direction. This bar is any bar. What we need to pay attention to is this one. If this bar is smaller, and by smaller we mean with the wick and the body, it is inside the length of this bar. So again here, the top of this bar is higher than the top of this bar, and the bottom of this bar is lower than the bottom of this bar. It's like a mommy and a baby. This can happen also the other way around, where candlesticks coming up, and then all of a sudden we have this. What do we do with this information here? So we know it's an inside bar because look, that is lower and that is higher than that, right? So this one here is lower than this one, that is lower than that, this is higher than that. and that's an inside bar. So if we've been trading all the way up here and then we get this, get out. Get out of the trade. If you are doing short-term trades, of course, we're not talking about holding and anything like that. If we're trading to profit on the fluctuations of the market, and obviously there's like so many indicators that we can use to help us on the charts, but we're just focusing on candlesticks. And as I said in my previous video, some people only trade candlesticks, so it can be a profitable way of trading. There's more indecision bars. We have double inside bars. Double inside bars. So you can have the bar, and then you can have the smaller bar, and then you can have an even smaller bar inside. So bigger bar, smaller bar that fits within the bigger bar, and then another smaller bar that fits within the smaller bar that was fitting in between the bigger bar. Oh, yeah, you get it. So that is a double inside bar, when you have two bars that fit within the bigger bar. That is extreme indecision in the market, extreme indecision. You don't want to be trading that. Just avoid trading that. Then we have doji bars. Doji bars are very easy to understand because even though they are pretty rare because price tends to fluctuate so much. But a doji bar is basically when a candlestick or an OHLC bar opens and closes at the same price. So it opens, let's just use Bitcoin. I love to use Bitcoin as an example. Let's just use Bitcoin as an example. Let's say it's $10,000 US, and we're looking at an hourly bar. At the beginning of the bar, Bitcoin was at $1,000 US, and at the end of the bar, Bitcoin was at $1,000 US. That's a doji bar. So you'll be able to see that on the chart in the form of a doji bar. That's what it is. So I'm just going to scribble on the chart because I need to draw. Like, I like to scribble, okay? I'm going to scribble anyways. Even though you already know what a doji bar is, I'm just going to scribble. So, candlestick opened here and closed here and say, yeah, you get it. I'm just going to draw a smiley face. And that's it. You know the bars. You know what the bars represent. So let's do a little exercise now. Let's go up to, where were we? So I made that little drawing earlier. Can you identify the candlesticks on the chart? This is exciting now because now you understand, you understand a little bit more about candlesticks. What is this? Drum roll, please. That is the lower third. We have a long wick. What is this? This candlestick is high test bar. What does a high test bar represent again? What do we do with a high test bar? What does it mean? Does it mean price is going to continue? Does it mean price is going to reverse? Or does it mean indecision in the market? Price is reversing. You got it. You got it right. It means price is reversing. So we don't know what happened before here. We don't know what candlesticks were here, but whatever was happening here, if it was going up, then it means that price is reversing. Of course, this is very important. Price is reversing in a bullish market. Okay, let's say price was coming from this direction here, and then you get this. It doesn't really mean anything. It doesn't mean anything, right? But if price was coming from here, price was going up in the upward direction, and then you get this candlestick here, then that means that price is likely to reverse in a bullish market. That was very important to clarify, by the way. So remember that. Let's have a look at the next candlestick here. Price did reverse, see? Woo! And I just threw these down randomly, but price reversed. What is this one? What is this candlestick here? This is a continuation bar. And it is a bearish continuation bar. What information do we know from this candlestick? We don't know if price was going down. Let's say our candlesticks were coming in from this direction here. So they were coming down, 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 down. Then we got this one, and then followed by this one. So it could mean that price is likely going to continue in the same direction that it was going in. If price was going up and then you get this, so many arrows, and then you get this one. After high test bar, you get a red continuation bar. That is a strong indication that price is probably reversing, but it's come after the reversal bar. So remember that. I know it sounds really complicated, but it's not. Like, what you need to understand is what these bars mean first, and then we'll get into the more advanced, like it's not even advanced, we get into this pretty soon. Yeah, we're going to cover this pretty soon. What is this? You notice it doesn't really have a wick down here, and that's because the candlestick opened here and then it went up and down and whatever, it did its thing, and it actually closed right there. So it didn't actually form a wick because it didn't go lower and then back up again. Here we've got another continuation bar, and if we look at the previous bar, price was going down. And so this bar is saying that price could still keep going down. What is this? So here we've got the third, probably around here, and we've got a really long wick. So this is, what is it? It's a low test bar. And it's a bearish low test bar because it's red. Now that we've got some information on the chart, we know that price has been dropping, and then we get this, which is a reversal bar. What this could be indicating here is a change in direction, which means the price could start to go up. That's really good information, thank you very much. Some traders would put a buy order on the top of the bar, but that is a little bit more advanced, and we're not going to cover that today. So let's see what happens next. We have this one here. What is this bar? We did learn this bar. Take a guess. It's a doji bar. What does a doji bar represent? Indecision in the market. Doji bars, we just leave them alone. Just let them be. Some traders will trade them, but as a beginner, you don't want to be touching doji bars. Just leave them. Leave the doji bars. Let them be. Next bar. What is this? Even though it looks like a bullish continuation bar, it's actually tricky, as we only look for bullish continuation bars in an uptrend, which we will cover very soon in another video. Then we have a continuation bar, and just to be clear, the wick must be higher than the high of the previous bar and lower than the low of the previous bar in order for this bar to be considered a continuation bar. And then what do we have here? We have a high test bar. Price tried to go up, but then there wasn't enough strength in the market to keep it up here. And it did close higher than it opened, but it was weak from a buying perspective. And so this bar indicates that price could reverse. From here, we can see that price has actually reversed. When you get this, you can just suppose that price is going to go down from here. Next, we have another bearish continuation bar, indicating price might continue in the direction that it's been going in so far. And then here we've got another one of those. We're going to wrap this up here because otherwise the video is just going to be too long and it's a lot of information to take in. You might want to re-watch this video again. If you watch this video the second time around, it's going to be easier to understand. And as I said in my previous video as well, please go and have a look at a real chart and see if you can observe the candlesticks on the chart and see if you can maybe understand a little bit what's happening there. Can you spot continuation bars? Can you spot reversal bars? Can you spot indecision bars? Can you spot high test bars, low test bars, doji bars? Try to remember the names of these bars as well. And I will see you in the next video for another little dose of technical analysis for beginners. So we're at beginner stage right now. Also, leave a comment below if there's any questions that you may have when it comes to candlesticks. If there's anything that I haven't quite covered in this video or anything that you would like me to cover in a future video. If you're a beginner, then it's very useful for you to be subscribed because every week, you're going to get a tiny little microdose of technical analysis and in order, which means that week after week, you're going to increase your knowledge in technical analysis until eventually you look at a chart and you'll be able to understand the language. You'll be able to, your eyes will be trained enough to be able to know what's happening there. So you've caught this channel at a very early stage, which means make sure you keep it up. Keep up the good work, and as I said before, I'll see you in the next video. Thanks and have a great day.